Hi, welcome to WealthMills Securities Weekly Market Wrap. It's a joy for me to come before you to share about equity markets and the global economy. Last week, markets closed at a very choppy phase, and also global markets, especially the US markets, also going through a very choppy phase. Overall, we have been kept on telling from past couple of weeks, Indian as well as the global markets are going through a consolidation phase. Last week, the big news came in the words of Federal Reserve Chairman Jerome Powell, stating that they are going to keep the negative or zero interest rates for an extended period of time, and they categorically informed to the markets and to the economies. The zero interest rate policies are the ultra expansionary monetary policies are going to continue till 2023. It is a good news for equity markets across the globe because it makes the fund flows to come into equity market, as the interest rates across the globe, if they are going to be at a bottom level for an extended period of time, that will allow the capital to be at a cheaper price and the company to expand and the consumption to go up. This news is a very favorable news to the emerging markets, especially the countries like India, China and other emerging market nations. Even it is also favorable to the, as the consumption goes up, it is also favorable to the Middle East and the BRICS nations. While coming to India, what we are gazing is, we are already one of the high interest rate regime economy. The regime currently we are going through the phase when we compare the global interest rates with Indian interest rates. Indian interest rates are, when compared to the global the interest rate standards, we are already a high interest rate economy. But in India, especially at present moment, we are the interest rates in India are at an all-time low. This the reduced extended period of global low interest rates will help the Indian economy to stay for an extended period of time at a low interest rates, and also RBI may take a call in the coming days to reduce the interest rates. This will definitely boost the consumption story in India. In turn, it will increase the profits of the corporates in the next coming 4-5 quarters. If these low interest rates are, if there is a prolonged low interest rate regime, that will boost the precious metals, especially the gold prices can go up. But as on date, if we observe the data, the gold is showing in a overbought zone already. So what is cheap is the base metals and also the equity markets when compared to the Indian data. When we see the data like especially in India, the corporate profits to GDP data, we are at a very low levels. Once the interest rates are at a low levels, and also post the ease of lockdowns, if there is a pent up demand, that will boost the corporate earnings of the companies. In turn, it will increase the activity of equity markets, and it will give a lot of headroom for the equity markets to go up whenever the earnings of the companies goes up. Just always remember, equity markets are always look for the forward earnings. So markets always try to discount the forward earnings of the market of the companies. That's why markets have been kept on rising across the globe. Always the GDP data and the data that comes in the media widely published is a post-mortem data, whereas the equity markets always look forward for the forward earnings of the data. That's why as a retail investor, as a normal investor, when the news is coming, a negative news, but in turn the markets have been, what we have been witnessing is the markets are going up. This is the main difference between the what the data is coming on, how the markets are behaving in terms of in response to the data. Nowadays, the main problem faced by most of the investors is, everyone is, if you are investing in equity market, so we are there on different WhatsApp groups, and also the right now, if I have to think 15-20 years back, investing in equity market there was very less information that was available during that point of time. If you have to do a data analysis or research about particular company, the only source of data is we used to read the annual report and the company updates, which used to come very frequently. Right now, the main issue for equity investing is we have too much of data. We have the company data, and every week different broking companies and different global companies, global investment companies give and share their equity strategies towards India. So right now, what the main problem, what we every investor facing is there is too much information to analyze and interpret the data. Of course, we do face such kind of problem because of the data flow is more at present point of time. Always remember, equity market is about difference of opinions. There will not be any consensus in the opinions. When we buy something, somebody is selling, means he is expecting the price to go down, or he is trying to exit that particular stock. But why we are buying? We are bullish about that particular stock. When we are selling, we thought the moment of that particular stock is over, that's why we are exiting. So there will be a divergent opinions in equity markets, and through these divergence of market opinions only, we are going to make wealth in equity market. That's why one of the famous investor, Dr. Mark Faber, always quotes like this: investing is always a lot to do with common sense. A man on the street know about more about the economy than the university professor or politicians or financial research analysts who seldom travel from one first class hotel to another first class hotel, or one Gulf coast to another Gulf coast, or they travel in the business class always. But as a common investor, as a common man, we can know much about the economy, much about the what's happening in the economy. The pulse and vibrancy of any economy is there in shopping malls. Of course, right now the shopping malls are closed. You can go to see and the shopping complexes, and you can go through the marketplaces where you can understand the economy, how the economy is going on. To be very precise, we have been stuck in the lockdown. Right now, some extent the lockdown restrictions are eased. So take a drive, go for on a weekend, go for 100 kilometers drive, and just try to observe the economy, how the economy is resuming, how the economy is coming back, how the economic activity is taking place. That gives more interesting data than what you read on the newspaper, because all this data has been a postmodern data. How we need to gauge the economy, how the economy is going to do, is just with personal observation. Nearly in India, nearly 60% of population are depend upon the agriculture, or they are in the unorganized sector, where we don't get the data in a much accurate manner. So just go for a drive and just observe. Currently, there was no lockdown with respect to the agriculture is concerned, and this year we witnessed a very good monsoon. If we analyze the data of the water levels in every reservoirs are brimming with water. So we can expect a very good Kharif and Rabi harvest in the days to come. And if you see if you observe the paddy fields and all, they are going to ripe. They gives a very good. There is going to be a very good harvest in the days to come. In turn, that's going to increase the rural income in the days to come. Urbanization is concerned, it takes time, because since the urban economy is in a complete lockdown, as the restrictions are getting eased slowly, they are coming back onto the normalcy. So overall, we are going to see a pent-up demand in the days to come, and due to the ultra expansionary low interest rate policies across the globe, equity markets and the company profits are going to do well. Just understand how the market works. For example, if you have a meter from 0 to 10, normally a retail investor, when the meter, the indicator, the economic indicators, when they moves from 0 to 10, people will realize, oh, it touched the 10, economy is doing well, so let's go and buy. But that is the time the cycle, the economic cycle is going to take a turn. That is the time people need to be cautious, extra cautious during the peak of the economic cycle. When it comes down to 1, people think, no, it's collapsed, stay away. That is the time one should understand, this is the time the economy touched the rock bottom and it's going to go up. Right now, we are in the phase of a rising economy, and the markets are going to do well in the days to come. As per the markets are concerned, currently Nifty is trading around 11,500 levels. Of course, it shows Nifty is little bit tired, but it's going to be a stock specific action, and there are many companies which are available at a very favorable pricings, and what we are going to see is the money flows chasing the undervalued stocks and the stocks where there is a growth, where there is a earning visibility, and stocks which are available at a much cheaper price. These are the stocks that are going to do well in the days to come. Right now, last few years, what we witnessed was a complete polarization of equity market, that too much money is chasing too few stocks. But right now, the money is going to be allocated across the spectrum of market universe. Last week, we shared about two stocks. One is Coal India. Coal India have not moved anywhere. It was underperforming. We educate the investors, buy Coal India. This is a very good price. If you have a time frame of 8 to 9 quarters, it is a good level. The stock can give very good returns in the days to come, because as the economy moves up and the energy demand goes up, coal sector is going to do well, and Coal India is the monopoly. We are having a analyst con call tomorrow with the Coal India management, so I can give the better prospects of Coal India during this week. And also what we are witnessing is the oil marketing companies. Oil marketing companies, especially the Indian Oil Corporation, it have not done well in the past 6 months. The stock is still available at the 52-week low price, that is around 80 rupees level. What we are witnessing is from the 1st of September, we are witnessing the demand for fuel, demand for diesel and petrol is going up. So the oil marketing companies' earnings are going to go up in the days to come in couple of quarters. So try to buy oil marketing companies at this point of time also at these levels. These are very interesting stories. These stocks are not discussed anywhere, but these are the ignored stocks and unflavored stocks. But when you have to make money, you need to go to these kind of areas. Last week, of course, we shared about a company by name Quick Heal Technologies. The stock during the week, it's up by nearly 30%, but it's up because of the valuations are concerned, but we are not going to book any profit in that company. We believe in the long-term fundamentals of that company, and we continue to hold that stock, and at every dip, we try to accumulate that stock for our clients' portfolios. This week, I am going to share about a company by name Goodyear Tires. This is a MNC company which produces the tires in India. Most people not aware, Goodyear is listed on stock exchanges also. This stock is listed on Bombay Stock Exchange, and with a market capitalization of around 2,000 crores with a decent valuations, and 75% of the company holding is held by the promoters. Just a 25% is available with the in terms of the public shareholding, and also that too led by the institutions. The main reason why we are looking at Goodyear is the stock has been we have been tracking from a couple of years. The stock have a very good fundamentals, quality management, and also the tires. As we are seeing the pent up demand in autos, and also as I have been sharing about the rural economy, and we can see the tractors sales have been went up significantly in the past 3 months. Especially if you observe the stock prices of Mahindra and Mahindra, we told about Mahindra and Mahindra when it went to 200 rupees. We advised the clients to buy Mahindra and Mahindra, and in fact, the stocks like Escorts, it went up. The main reason is Escorts produce the tractor and the farm equipment. But one of the key segment for Goodyear is they have the farm equipment, and the tractor tire business is going to boost in the days to come. So what we are seeing is one side of the coin, the tractor sales and farm equipment sales have been going up, and auto sector sales have been going up. Whereas the Goodyear is one of the key player in terms of the tractor tires. So Goodyear is going to do well. If you have a time for horizon of 8 quarters, it's a good entry level to accumulate Goodyear, and it's going to give very decent returns to the investors. This is all with me this week. to share about the market updates, but please do take care about your health. The COVID numbers have been going up. Please do take care about your health and take extra precaution and stay healthy. Thank you.